Welcome back to my week 6 of 2023 trading log. This video is going to be pretty short. This was a pretty uneventful week. I only saw one good playbook trade on the week. Each day didn't have a great plan for the day. Didn't really see any names I wanted to trade. I didn't really want to trade market internals. I did take 5 trades on the week, so I'm going to go over those really quick. And I'm not going to go over any playbook trades at the end because the one trade that was a playbook trade was on Microsoft, and I'm going to show you that for my trades on Wednesday. So to jump right into it, my first trade of the week was on MES on Monday. So I lost about $60 on this trade. There was no real setup. The trade that I took was not in my plan, and it was a forced trade. So not a good trade at all. Here's my entries. This is my pre-market game plan, my notes on the trade, and then a quick picture of the chart. So off open, we had gotten over this 41.25 spot, which wasn't really a level, not what I was looking to trade around. Right here was 41.32.5, which was the Friday of the previous week's low. So we rejected off that spot, and then we're coming down to VWAP. And for some reason, mentally, I thought that I wanted to take a trade around 41.25 around the hold of VWAP for more upside, even though that's not what I was looking for. So that was the entry that I took, and then I stopped out of that trade. So really wasn't a smart trade to take at all, and it was my only trade from Monday. I didn't take any trades on Tuesday, didn't see any good setups, didn't see any names that I wanted to trade. And then going into the day Wednesday, Microsoft was the one name that I really wanted to trade. We had gotten a bunch of upgrades, and let me go down here, and you can see that Oppenheimer, Jefferies, JP Morgan, D.A. Davidson, Mizuho, Wedbush, and Piper Sandler all gave upgrades on Microsoft. And there's been a lot of hype and conversations around ChatGPT right now. And Microsoft has been on a pretty decent tear. Also on the chart, this 270 level is a major long-term level. And the previous day's high was 268.77. So we are gapping over that major level. And in the pre-market, we are clearly holding 270. So right here, I'm going to show you on the chart, this 268.77 is the prior day's high, and all throughout the pre-market, we're holding 270. So I'm looking for a trade to hold if we get over pre-market high, and I'm also looking for a bounce at 270 if we get down to 270. So this first trade that I took was on the hold of 275. You can see that this 930 candle pushed over, got to 275. We rejected off 275. We then came down and held VWAP and pre-market high right here. This was the playbook trade that I really liked, that I was ready to take, that I just didn't take on the hold of 273.6 and VWAP. It was really clear on the tape that there was clear buyers below 274. So this entry for a push over 275 up to 276 and then the high 276s was a really good trade. But then I was seeing that we were holding this 275 spot. So I got an entry on 5 contracts. I scaled 3 at just below 276 because I was seeing on the tape that we couldn't break over 276. And then I stopped out of my last 2 when I saw that the option contracts were losing value. This is what it looked like on the chart. Right here is this 275 level. Got an entry in the low 275s and then stopped out right around my entry spot. So then the other trade that I took on Wednesday was another Microsoft trade. And again, I took 5 contracts, even though I really shouldn't have been taking 5 contracts. This was my second attempt on the 275 hold. My size was too big, and obviously, again, this was a continuation strength play. So at 9:49, when we had gotten right around 275, I got an entry, 5 contracts at $1.48. And I wanted to see us possibly wick below and then hold 275 and then continue back up. So I got in, and then once that it was clearly evident towards the end of this 9:49 candle that we were going to close below 275, I cut out. And really, I didn't want to risk this much on this trade. I shouldn't have been risking $100 on this trade. I should have only been taking 3 to 4 contracts, but that's just how it goes sometimes. And let me show you on the 5-minute chart, this actually still looks really good for a continuation to the upside. So we had a really strong opening 5-minute candle, and then these 2 low volume red candles, and even this third red candle, which could have held 275, was a pretty low volume candle. So I thought that we could have gotten a push back up to high of day and possibly through high of day. So I'm not mad about myself taking this trade. I still think that it's a good setup, but I need to be sized down a little bit because once that you take your first trade, the second attempt on that same entry, you shouldn't be taking as much of size and incurring as much risk because the trade didn't work out the first time. So it's not to say that it's not going to work out again, but you don't want to be taking on a lot of risk. I then took one trade on Thursday on Meta, and ever since we had gapped up huge on the earnings beat, we had seen a hold over 183. 183 was the major level on the daily chart that we were clearly holding, and the prior day on Wednesdays, the prior day's low was 182.92, and we had been holding 180, but the real level is 183. So once that the market was fading and Facebook had gotten below, or Meta had gotten below 183, clear downside strength, and then we came back up and retested 183. I got an entry right here on this rejection of 183. I had a very good entry fill, and then I was going to get out on the play over 183. So that's what happened. I basically stopped out for break even. As you can see right here, I got in 4 contracts at $1.10. And then I stopped out of those 2 minutes later for $1.07. So really not much risk at all in this trade, a pretty risk-free trade. But it's a very good entry to take, a very good trade to take. And had we gotten a continuation down to low of day and then potentially through low of day, this would have been a really nice cash flowing trade on very low risk. All right, so my last trade of the week was on MES. And this is another trade that I was pretty happy with taking. This was an opening drive trade, a hold of yesterday's low. And this was a good setup that just didn't play out. So if you see right here on the chart, this 40.7825 level is the prior day's low. And this is basically the 40.80 level. And you can see from about 4:30 on until open, we're holding below yesterday's low. So I'm looking for a rejection from yesterday's low for continued downside down to 40.70 and then 40.60, and if we get below 40.60, this could continue to run. So this is what it looked like on the daily chart. 40.7825 was the prior day's low. Here's my notes from the trade, and I got in 7 seconds into open. I got short 5 MES contracts at 40.81. And what I was looking for was, since we had opened right around 40.78 and then pushed over 40.80, I wanted to see if we were going to create a topping wick and then get below that 40.78 spot, have a wick over the prior day's low to show a clear rejection. And then if we continue down, I was just going to stay in this trade to see how low we could push down. This was a pretty uneventful week in general. Something that I did notice is that, especially this week, I was just kind of forcing trades, just looking for trades to take. You need to trade when the market is giving moves, when either there's news in the market, somebody reported earnings, or just a name is moving based off of no earnings or no news, just based off of simple price action. So you need to be able to spot those moves in the market, and then when there's no moves, you need to not take on any risk and not take on any trades. So something that I'm going to be doing going forward is I'm going to be slightly more sized up on what I define as my playbook trades, so that I know that, okay, this is a playbook trade. This is when the market is moving, when a name is moving, and I can see a nice big move on it. And Mike Bellafiore says in his book, The Playbook, that you need to be sized up as big as you can in your best setups. So it doesn't make sense to have the same amount of sizing, which is what I've been doing for the first 6 weeks out of this year, in all of your setups. In your best setups, you need to be sized up as big as you can. And then in your other setups, you're going to be in your maybe A setups, A minus setups, B setups. You're going to be slightly lower size, maybe half sizing. So for me, I'm going to be looking to take anywhere from 5 to 8, possibly 10 contracts, whether that's option contracts or MES contracts, in my playbook trades. And then for all of my other setups, I'm going to be looked to be sized in anywhere from 3 to 5 contracts. So that just gives me the size and the risk that I'm looking for. And it also gives me the mental cue that, okay, these are my really good setups. These are trades to hold. I'm looking for a nice move here. And if I get stopped out and I incur a slightly bigger loss, it's okay, because I want to be sized big in my best setups. So that's just a little note, something that I've been realizing after my first 6 weeks of trading this year. So you'll see that going forward. I hope that you enjoyed this video, even though it was a little bit shorter, and I'll see you guys next week.